2023 marks the 75th year of public ownership of the Reserve Bank and its emergence as a national institution. This is an opportune moment to briefly reflect upon the evolution of monetary policy over this period. In the 2 decades after independence, the Reserve Bank's role was to support the credit needs of the economy under the 5-year plans. The following 2 decades were characterized by bank nationalization in 1969, the oil shocks, and monetization of large budget deficits, and sharp rise in money supply and inflation. Monetary targeting was adopted in the mid-1980s to contain growth in money supply and curb inflation pressures. Since the early 1990s, as everyone knows, the Reserve Bank focused on market reforms and institution building. A multiple indicator approach was adopted in April 1998, under which a host of indicators were monitored for policy making. In the aftermath of the global financial crisis and the taper tantrum, as inflationary conditions worsened in India, flexible inflation targeting, that is the FIT, was formally adopted in June 2016 to provide a credible nominal anchor for monetary policy. As we know, the primary objective of monetary policy under the flexible inflation targeting framework is to maintain price stability while keeping in mind the objective of growth. Coming to present times, the unprecedented events of the last 3 years have put to test monetary policy framework across the world. In a very short period, monetary policies across the world have veered from one extreme to the other in response to a series of overlapping shocks. In contrast to the great moderation era of the 1990s and the early part of the current century, monetary policy was confronted with an unprecedented contraction in economic activity, followed by a surge in global inflation. This calls for a deeper understanding of the structural changes in global economy and inflation dynamics and their implications for conduct of monetary policy. In the current unsettled global environment, emerging market economies are facing sharp trade-offs between supporting economic activity and controlling inflation while preserving policy credibility. As global fault lines emerge in trade, technology, and investment flows, there is an urgent need to reinforce global cooperation. The world is looking to India, now at the helm of G20, to energize global partnership in several critical areas. This reminds me of what Mahatma Gandhi had said. I do believe, and I quote, I do believe that India can make a lasting contribution to the peace and solid progress of the world, unquote.